Hi guys, welcome back to my channel. Kelvin here. So recently, Crypto.com changed their card rewards. And you know, it's a bad change because right after that, the CRO price fell by over 20% before recovering slightly. So in this video, I want to quickly go over the changes and share my thoughts on this. Alright, let's start right now. The first change is the reduction of CRO card rewards. They have two columns here, no stake and active stake. But I'll just look at the active stake part because no stake rewards have always been bad since a long time ago. Okay, it's a bit hard to see what's the change here. So let me modify the HTML a bit because you know, I'm something of a programmer myself. Here, we can see that they reduced their CRO rewards for all the cards. For example, Midnight Blue from 1% to 0%, Ruby Steel 2% to 0.5%, Royal Indigo and Jet Green 3% to 1.5% and so on. Then, their second change, they added a money rewards cap. Only two cards are affected here. For Ruby Steel, there will be a $25 cap. For Royal Indigo and Jet Green, $50 cap. So if you work backwards, for Ruby Steel, to hit the money cap, you will be spending about $5,000, which is almost impossible to hit unless you are some rich Saudi prince. But then, if you are that rich, you might as well use the Obsidian card already. Then, for Royal Indigo and Jet Green, you will need to spend about $3,333 before hitting the limit, which again is super duper hard. Third change, reduce in staking rewards. So originally, they cut all the staking rewards to 0, which made everyone unhappy. So the CEO tweeted this: "The community has been really vocal with regards to the changes. We care deeply about the community. We hear you and always listen to you. Instead of eliminating card staking earn rates completely, they will give you a bit of interest." Here are the changes. For Royal Indigo and Jet Green, previously you were getting 10% on your stake CRO. Now you will only get 4%. For higher tiers, 12% to 8%. So basically, those are the three main changes to the card rewards. There are no changes to the card benefits like free Spotify and free Netflix for now. Also, if you are already staking the card before 1 May 1300 UTC, you will still be earning the old rates until your 180-day stake expires. But otherwise, you will immediately get the new lower rates. So why did Crypto.com suddenly reduce the credit card rewards? In the article, they mentioned that this was to ensure long-term sustainability. I have no proof, but my guess is that they grew too fast and too furious, where they were paying out tons of rewards, but weren't earning enough to cover the cost. Because just a while ago in March, they had also cut their earn rates. This problem isn't just limited to Crypto.com. For example, Anchor Protocol, they were getting too many deposits and not enough people borrowing. So they reduced their interest from 19.5% to 18%, which will further drop to 16.5% by June. Or Hodlnaut reducing their interest rates so that they can remain a sustainable business. Whether it's a good move or not, I don't really know. But let me share whether I think the cards are still worth it to use or not. Okay, for Midnight Blue and Ruby Steel, they are not worth using anymore in my opinion. Previously, when Ruby Steel was giving a 2% cashback, it was better than some cards. But now, at 0% and 0.5% rewards, there are easily better cards out there. For example, the City Cashback Plus card gives you 1.6% cashback with no minimum spend, or the HSBC Advance card, which gives you 1.5% cashback all the way to 3.5% cashback. On top of that, you will receive some free gift that's worth $300 to $400, like the Apple Watch SE when signing up. Then, for Royal Indigo and Jet Green, which gives 1.5% cashback and free Spotify and Netflix, whether it's worth it to use or not depends on one thing. Are you bullish on CRO? Because the thing is, you are locking $5,000 for pretty small rewards. For example, my main card is the UOB1 card, where I'm already getting at least 3.33% cashback with $500 minimum spend. Almost double the cashback here. As for free Spotify and Netflix, that's actually a trick that you can use. So Spotify costs $9.90 per month and Netflix costs $13 per month. 1 year, you will spend $274 on them. So let's say you take that $5,000 and stake it in Anchor Protocol. With a 16% interest, you'll be earning about $800 per year. After paying for Spotify and Netflix, you will still have leftover money to buy a Thai fund with Fisher. So back to the question, are you still bullish on CRO? If yes, then all these side benefits are good, while you are earning capital gains on your stake CRO. If you are not bullish, then it's better to move your money elsewhere. Same for higher tier cards. You are locking 50k or 500k, which is a huge amount of money. I would only recommend staking CRO only if you are bullish on CRO. So what do I think? Am I still bullish on CRO? In their white paper, you can see their use cases for CRO. Okay, the Visa card rewards is quite unattractive now, but you can see that they have plans for DeFi and GameFi, both of which are quite a big market. If you check DeFi Llama, Terra's total value locked right now is about $29 billion, while for Kronos, it's just $2.93 billion. So they still have a lot of room to grow. But with that being said, whether they can manage to pull it off or not, I'm not 100% sure. Prior to this incident, their total value lock was growing steadily. As of right now, it's hard to tell because everyone is angry at Crypto.com for the change. So in short, I'm cautiously optimistic of their future. Again, if you're only using their cards for their benefits, there are way better cards out there. Only use their cards if you're bullish on CRO. Anyway, that's all for today. Hopefully, you find this useful. Like, share, and subscribe as I'll be posting new videos every Monday, Wednesday, and Friday.